to start with this picture today because I don't have a syllabus. Guys, we are going to talk about 3 advantages really. It's the same advantages that I talk about every day. I firmly believe that repetition creates recognition, guys. And my hope and my goal for you new users, or even more importantly, you more experienced, you people with some time under your belt that aren't where you want to be yet, that we can make it simple. Mark with nothing to talk about. It's never happened, Ron. Never happened. Guys, we're going to talk about momentum. Whether you are TradingView or whether you are NinjaTrader, there are 2 platforms that are discussed in the room. We're going to talk about recognizing when the momentum is in your favor, guys. We're going to be able to recognize, and I say we because I've got to do it every day. I trade as well. Whether or not there is something in your way or if you have a clear path. Now, if you've ever driven a car, most of you choose not to drive into brick walls. If you have a newer car, my car won't even let me back into something. It will lock it up and say, no, you don't have a clear path, don't go, dummy. And it's angry about it when it does it. So we'll be able to recognize a market that is absolutely screaming in the direction that we want to go. A market with absolutely nothing in the way in the direction that we want to go. And then finally, we'll just define an entry area, guys. There's entry patterns on both platforms that help you reduce risk, and there's entry patterns on both platforms that keep you from fighting. And it really boils down to 3 things: momentum, path, and entry. And no matter where you are with this software, if you always focus on those 3 things, if you're always saying, I have this, that is there, I see this, guys, you have a high probability trade. And that's really the focus, is being able to look at your charts and understand what's working for you and what's working against you. The automated warnings, Andy, there are no automated warnings. Now, there is an automated system that is based solely on the idea that when you have momentum, path, and entry, you have a high probability trade. And the automated system has been produced, created, and when the rules are true, it will produce a signal that'll put you into the market. There's another one that it took, long trade, momentum, and path. It's not a warning system. This room, guys, is 100% discretion. This room is teaching you to read indicators so that you can make good decisions. Now, you are in control of the entry. Nobody's going to put you into the market without your permission, I hope. If they are, blink twice. You're in control of the entry. And guys, when you know what's good, when you have momentum, when the path is clear, when you can define an entry area, and when you know what is bad, the omission of one of those advantages, 2 of those advantages, guys, you can make the decision on whether or not you want to enter and how assertively you need to manage it. My job in this world is not to tell you when to enter the market. My job is to teach you to read your indicators so that you can make those good decisions. Now, here's the cool thing. Has anyone ever, if I handed everybody a paint set, right, and I said paint a flower, the likelihood of seeing 20 flowers that look exactly the same is virtually nil. It's not going to happen. Trading is very much the same way, guys. You're going to take the tools that are given you, and you will find your way. You will find what speaks to you, what works for you. There are no right or wrong trades, guys. Your plan is an individual, but I'm going to focus on the best of the best way. And when we talk about our morning, we're talking about rules that are designed to optimize your chances of success, that are designed to help you create more success than failure. So we're going to learn to read the indicators so that we can recognize advantages. And I say we, guys, it's you. I say we. I've got a mouse in my pocket. But the reality is you're going to be able... Got to get used to typing over the trade. Give me a minute. Master B, you are just fine, dude. You are just fine. Guys, we're going to teach you to read I'm going to teach you to read your charts. That's what it is. I'm going to teach you to use indicators to recognize advantages, and I would encourage you, start speaking out loud. I see this advantage. I see this advantage. Scare your cats. We're going to do it through using high probability trades. When you have momentum, when the path is clear, when there's nothing in the way, guys, and you're going to find that 90% of your day is waiting for advantages. 90% of your day is looking at your chart saying, nope, not what I need. I'm going to wait. I'm going to go play Yahtzee or online Scrabble. I'm going to play video poker. I'm going to read a book. Anything other than enter the market without my advantages. But once you get good at that recognition, when you get to the point to where you can see momentum in a moment, where you understand clear path, guys, you're gonna understand where the market is likely to continue. This is going to be your entry points. You're going to see a lot of different entry points, but initially, your likely to continue spot will be right where the prevailing trend with all that momentum and clear path is most likely to bounce, and just continue the journey. You will understand where the market is likely to go. This is going to be very helpful in picking your targets, creating patience, holding for the bigger move, and you'll understand where the market is likely to stop. This is also pretty good with targets, but the importance of the likely to stop, it will serve as a big red flag, guys. A giant red flag that says no more trades into this area. This is where the reversal could happen. This is where the bounce could take place. This is where you're most likely to lose money. So you're going to have all that brilliance, and you will, with only 3 rules, guys. This is for NinjaTrader first, and then we go into TradingView. I cover both platforms. Guys, they are separate. They are their own entities. TradingView and NinjaTrader are apples and oranges, guys. There's a lot of similarities, but the rules are different. So know which platform you're on. And if you're a TradingView user, it's okay to ignore the next 20 minutes. And if you're a NinjaTrader user, when I go to TradingView, it's all right to ignore that. Focus on the platform that you're on. And we're going to look for 3 rules, guys. When the rule is true, it creates an advantage. You'll say these advantages out loud. I have strong triggers. I now have the advantage of momentum. No terminations. Those are those likely to stop the market areas. I have a clear path. Let me go define my entry at an area inside of triggers, guys. And these 3 rules happen on only 2 charts. And what's cool is on your large chart, that big slow moving chart, guys, this is like a broad stroke of a brush. The most current bar, the first printing bar, this is the bar that will define the direction of the market, let you know which way you're looking for rules to be met. This is the bar that will define the momentum using the trigger lines. This is the bar that's going to help you understand whether or not you have a clear path. Rules 1 and 2 must be met on the large chart before you ever turn your head over to a smaller chart, a faster chart. Call it your entry chart. And this is going to refine the big picture, guys. It's going to pinpoint the entry with rule number 3. It's going to allow you to have less risk. It's going to allow you to have bigger profit potential. And everything inside of this one bar, the advantages don't waver inside of one bar. You're going to see retracements. You're going to see bounces. You're going to see continuation. And it's this refinement process that really gives us the accuracy for rule number 3. We use the 2 charts, whether it is TradingView or NinjaTrader, because you're not in charge. And our goal is to have an edge, and our edge comes from going with the people who are. So I want you to think of your large chart as the large crowd. These are the men and women with the money to create trends. These are the men and women that establish that momentum. These are the men and women that react at key areas. And when you go with a large crowd, the large crowd typically wins. Your small chart is like a small crowd. These are the fighters. These are the folks that have still way more money and influence than I ever will. And they can create what's called a retracement or a pullback. And a pullback is a small move counter to the underlying trend. We rely on their fight. We rely on their pullback, and your rule number 3 is going to pinpoint right where they're most likely to fail. And they fail typically 70 to 80% of the time. when the high probability trend trade rules are met, which puts you in the position to have the potential to win up to 70 to 80% of the time. The way I teach the high probability trend trade and the plan that I'm going to give you in this room, I have never had anybody, and I don't imagine anyone in this room will be the first, I have never had anybody do worse than 70% winners when they follow the plan to the letter. So we're going to go through and we're going to learn the rules for when it's okay to trade. Here's your Sunday school answer. Well, Mark, when is it okay to trade? For me, it's okay to trade when my rules are met, because my rules create an edge. My rules describe a pattern that I can go back and study, that I can prove win more than they lose. That's when it's okay to trade for me. Everybody in the room has the ability to simulate, guys. There's no reason to go to a live market until you're ready to be on a live market. So you can go to the batting cages. You can get all your reps in with no fear of losing money. But the first step in becoming a confident trader, ASAFP, guys, is post in the room. Get into the conversation. Be a part of the classroom, guys. Participate. Because every time you post in the room, you get a private session with me. Every time you post in the room, I open it up, I look at it, we talk about it, you tell me what you see, and of course, Master B left me hanging on that one, right? But he posted in the room, last night was unbelievable, saw everything last night, 6 p.m., couldn't believe I see everything unfolding, triggers up, pull back, clear path, awesome, time to get some overtime, great stuff, I love it. Master B, you're learning to read your indicators, right? And those advantages scream off the screen at you when you start to see them. Great job, man. Great job. I know, Victor, you are shy. You little wallflower, you. So, guys, post in my room. Like, don't be afraid. There's nothing you can post that isn't okay unless it's political or religious, or disparaging to someone else, or trying to sell something in my room. But, guys, every time you post in my room, describe those three things, those three advantages. Describe the momentum that you see. Describe the termination conditions, whether they're present, whether it's clear, whether the potential to break is there. Show me your entries. Show me your exits. And my promise to you, Master B, you're good, man. We're working together. We're learning how to talk to each other. We're just fine, guys. And there will be a growth process. If you give me this every time, I'm going to make sure you're reading your indicators correctly. If you show me a trade you took, and I say, whoa, wait a minute, I think you could have reduced risk here. I think next time you take this pattern, here's a way to make a little more money. Look what the chart's telling you. Guys, I'll give it to you. I'll give you everything rattling in my head to help you become a better chart reader. But you have to tell me what you see. Don't make me guess. And what's cool, sorry, I'm drying up here. Your annotations, when you take the perfect trade, guys, and you're like, wow, this was effortless, this was amazing, your annotations are going to serve as a recipe for repeating that process. You are literally describing the pattern that is bringing you success. That makes it repeatable. That makes it testable. And as new users, we are very, very shy from going through this annotation process, because there's a little devil in the back of your head saying, but what if I'm wrong? What if that wasn't strong triggers? Well, if it wasn't, Mark will very lovingly nudge you in the right direction and give you a lesson on strong triggers. And what if that wasn't a clear path? What if it was only the potential to break? Mark, once again, will give you a very loving, a very soft lesson on what it means to have potential versus a clear path. So, guys, get active in this room. You will see that the people who post the most tend to post the most winners, tend to get where they want the fastest. That's the first step in becoming a confident trader ASAP. The second step is keep it simple. KISS plan. You are going to be handed two plans. I'll do it right now. There is the KISS plan. Whoops, it didn't go in. I'm going to give you the KISS plan for Ninja Trader. Keep it simple, sunshine. I'm going to give you the simple plan for TradingView, and I'm also going to give you a couple spreadsheets. So all of those just got put in the room. The path of least resistance, guys, the easiest way to get to where you want to be the fastest is to have the fewest moving parts. This software is amazing, and there's so much that you can do with it. I encourage new users, I refuse to give trading advice, but I encourage you new users, 1 or 2 trades in the beginning. Get really good at 1 or 2 trades. Find a way to be consistent with 1 or 2 trades. And once you learn those 1 or 2 trades, hopefully the high probability trend trade, what happens is you see the rest of the trades. Ron, here comes your nickel. Call your lawyer. The high probability trend trades, guys, are not designed to be your only trade or your get rich trade. They're designed to open your eyes as a chart reader to see more opportunities the software provides. So by keeping it simple, you can find success. And when you find success, it creates confidence. And when you're confident, guys, you don't hesitate. So you've got to learn the looks, the patterns that are bringing you that success. That's where the spreadsheet comes in. This is the NinjaTrader spreadsheet. I just dropped it in the room. And strong triggers is rule number 1, highlighted in green. Clear path is rule number 2, highlighted in green. High probability trend trade entries, highlighted in green, guys. Learn these 3 advantages individually. Because when you learn the 3 advantages individually, you will piece them together to create the best trade. The second tab is the client trades. 500 pictures of that pattern to burn into your head to make it easy. When you see this pattern in your sleep, guys, it slows the market down. It doesn't feel as crazy or fast because you know exactly what you're looking for. There's a place for you to build your plan, and then both sheets will have trade tracking. If you're looking at the trading view sheet, a lot of pictures of trades that have already happened, a place for you to study, and a trade tracking sheet, guys. The trade tracking sheet is going to pay huge dividends. Every time you take a trade, take a picture. Every time you take a picture, it's annotated. You've gotten feedback on it because you've presented it in the room. So every morning, go back and look at those trades. Look at your pictures. Look at your annotations and look at the feedback. And if you do that every morning, what happens is it sets you up for success, guys. It puts you in the position where you're focused on the things that are working. You're focused on the advantages that are bringing you success. But I think even more importantly, you're focusing on what didn't work. What was counter to getting me to where I wanted to be? And I'm going to let you guys in on my dirty laundry. Trading in determination conditions, guys. Trading into areas that were likely to stop the market was my biggest challenge as a brand new user, because it meant that I wasn't in the market. It meant that I was forced to sit still to do nothing, and I can't make money when I'm doing nothing. That was my mindset. But when I posted in the room, John Novak recognized it. He goes, "Mark, you keep trading into lines. Stop." And then he called me names privately. He goes, "Here's how you avoid it. Here's how you stop losing money trading in determination conditions." And he gave me a simple phrase that absolutely saved my bacon. So go back and study this each morning, guys. Get yourself in a position where it's nice and simple, where you learn the looks. Post in the room, use your spreadsheet. And now we're going to get in and we're going to talk about the high probability trend trade. But first we're going to introduce indicators, guys. If you are brand new with me in this room, both your large chart and your small chart will have areas. Areas, horizontal lines on the large chart, horizontal lines on the small chart. They all have names. You don't have to know how they came to be, but you're going to see divergence highs. It's a magenta line that'll print if there's a loss of momentum at a pivot. Divergence lows are the same thing at a low pivot, just cyan. Hot pink and baby blue, guys. It's like going back to the 80s. You're going to see Fibonacci resistance. In an uptrend, this red line could stop the market, create a bounce, create a reversal. You will see it long before you ever reach it. Fibonacci support does the same thing in a downtrend. And then these yellow 1-to-1s are like fibs in a moment. They print live throughout the day. The software is constantly running calculations. These are 100% Fibonacci alternates. These are used by the institutional traders. You will see them on your chart. When the market is trending up, they may behave as resistance. When the market is trending down, they may behave as support. Areas will show up on large and small. But trigger lines do all the heavy lifting in your plan, guys. Trigger lines, small, solid lines, fast moving average, large, dashed lines, slow moving average. Trigger lines will be used to define momentum. Trigger lines will be used to define termination conditions. Trigger lines will be used to define your entry, guys. Trigger lines tell the story. So we're going to break these rules down individually, and I'm going to go over what it means to have strong triggers so that you can have momentum. We're going to talk about how to identify a termination condition, making sure you have a clear path, and then we'll go through the entry pattern for defining your entry so that you can have the least amount of risk and the highest profit potential. And again, it all starts with trigger lines. Rule number 1, you must have strong trigger lines on the large chart because that is where momentum is defined. In order to have strong trigger lines, you must be trading with the trend. The trend is defined through background color. If it is green, up. If it's down, red. Your highest chance of success comes from going up with the green background, down with the red background. Strong triggers, we're going to draw the picture today. Strong triggers in an uptrend means that your small triggers have broken above and away from the large triggers, that your large triggers are wide, and it's so important that they're wide. There is no boogie in flat triggers, somebody said once. I want you to picture scissors. And when scissors are open, you can cut. When scissors are open, they can get the job done. When scissors are open, somebody else can cut you a check. So when scissors are open, whether it's small below the large or large above or small above the large, it's that open scissor look. It's that gap between the two that lets you know you have strong triggers. And when you have strong triggers, the odds are favorable for the market to continue in the direction of the trend. You're going to see on charts all day long. It is so hard to write with this. You're going to see OFM, odds favorable momentum. And when you have odds favorable momentum, guys, this is a market that is more likely to continue in the direction of the trend. You have a look that we're going to rely on to break key areas. And guys, when you have strong trigger lines up or down, this is when you'll go to that small chart and you'll look for those entries, those pullbacks to areas of support, those pullbacks to areas of resistance. So strong triggers lead the way. When strong triggers go away, it looks like this. Your scissors close. Smalls work their way inside of the large, guys. This is weakness. Anything can happen up or down. So when I talk about strength and weakness, it's very absolute. And it's on a large chart. And here's my most current bar on crude oil. And my small triggers are up. And my large triggers are down. And the colors don't match. Which means that rule number 1 is not met. Does that make sense, everybody? When the colors don't match, my rule's not met. And if my rule's not met, it's okay to do nothing. Strong triggers is that separation. Strong triggers is that gap, is those open scissors. That tail right there may have been an entry. We'll come back and look for it. Strong triggers is that separation, that strength, that push that it takes to break key areas. Once again, there's one of those tails, a potential pullback on a smaller, faster chart. We'll come back and take a look at it and see if it produced an entry. There's another one right there. That's a little foreshadowing. With momentum, you will look for entries with that look. Is everybody good with that? Yeah, you are. I hope so. If you're not, raise your hand. Because once we're done with momentum, guys, we're going to go to clear path. We're going to make sure that there's nothing in the way, that there is room to profit targets, guys. And you're going to see these areas on your large chart long before you ever get to them. You're going to know exactly where they are. And guys, if you trade directly into a termination condition, you are more likely to lose that trade than you are to win. It's important that you understand that. Trading is about probabilities. And when you trade into a termination condition, the probabilities are not in your favor. So we're going to define a termination condition real quick. And I want you to remember that idea that the large crowd reacts at these areas, that the people in the know react at resistance, support, one-to-ones, divergence highs, divergence lows. So the first step in defining a termination condition is you're going to let price reach an area. price is the big crowd move. And when they get to an area, this is where they make decisions. This is where buyers buy and sellers sell. This is where profits are taken. This is where trades are exited. Guys, this is where fights happen between buyers and sellers. And you'll know about it before you ever get there. So price reaches an area. That's the first step. If I'm all the way down here, that area is a target. It's not a termination. Price reaches an area, and my trigger lines will tell me everything that I need to know. All we're going to do is count triggers. So if price reaches these yellow 1-to-1s the same way it did here, and none of your trigger lines get above it, it's a termination condition. I want you to assume that the area is going to hold. I want you to assume that it's going to create an untradeable bounce. I want you to just believe in your heart as a brand new user that you have a snowball's chance of making it through that area, and that's going to keep you out of a lot of losers in the beginning. If 2 trigger lines get above the area, you're small. This area is starting to show the potential to break, but guys, it's not the best look yet. 2 triggers through says, hey, we're trying, let us try just a little bit harder, and then that potential is there. When 3 of your trigger lines get through an area, whether it's support or resistance, now it has the potential to break. This will be the second trade on your NinjaTrader KISS plan. Being able to capitalize on the potential of these key areas to break. It relies on momentum. It relies on the perfect entry. Your ability to read charts will let you know whether or not it's worth taking a chance. The path is not clear until all 4 triggers get above that area, or all 4 triggers get below an area of support. When that happens, resistance behaves as support. And when that happens, support behaves as resistance. And guys, your clear path will remain clear until you hit the next area. And your clear path will remain clear until you hit the next area. So what you're going to do is you're going to use rule number 2. This is pretty outstanding. You're going to use rule number 2, and you're going to learn a very simple phrase. If price reaches an area and absolutely none of the triggers break through that area, you're going to say that's a termination condition. That's an area that is more likely to stop the market than it is to just break. And then when 2 triggers or 3 triggers get through the area, you're going to pause and you're going to make sure that your advantages are in place. And you're going to say to yourself, okay, this has the potential to break, but let me make sure that it's perfect. And then guys, when you have a clear path, it's just go. And the easiest money that you will ever make will be in between Fibonacci areas, absolutely nothing in the way, room to targets. So by learning that very simple concept of counting triggers, you'll be able to put yourself in a position to not trade into areas that are likely to stop the market. So again, let's look at the most current bar. The trend is down, and I don't have momentum. Rule number 1's not met. But if I were to go short, do you see that price has not reached an area? That all of my triggers are below those yellow 1-to-1s? I do have a clear path down. I just don't have any momentum to push that market down. Not yet. We'll see what happens. And guys, terminations can be that easy. Is everybody good with that? Price reaches the area, count triggers. It takes 4 to define a clear path. I'm going to let you in on a secret real quick. I like to give all the secrets, guys. I do not hold back in this room. There will be times when areas are stacked. There will be times where you're like, man, I can't seem to get a clear path to save my life. Futures markets trade billions. Can't spell. Billions daily. Actually, it's billions hourly if you add them all up together. It takes $400 a day to make $100,000 a year. It takes $400 a day to put you in a 6-figure income, guys. I want you to learn how to be okay, to sit on your hands, to say, you know what, I don't have to hope that that area breaks because the next trade is absolutely coming. So large chart's done its thing, guys. It's given you momentum through strong triggers. The large chart has given you a clear path, all 4 triggers through an area. This is the best of the best, designed to optimize your chances of success. And now we're going to go to the smaller chart, the faster chart. And we're going to pinpoint where the small crowd's most likely to fail, guys. And we're going to do it with such accuracy that we're going to use a limit order to buy or sell a pullback at an area inside of triggers. We will literally wait for the market to come to us at an area inside of triggers, and it's important that you learn that whole phrase. So when the large chart is up, when the path is clear, when life is good, and I can't wait to get a trade, guys, the beginning of your entry pattern is a reversal bar. It's actually a down bar, which scares a lot of people because they're saying, oh my gosh, the market reversed. The market didn't reverse, guys. This is the tiny little fluctuation inside of one bar, inside of just one bar, that's giving you everything you need to look for an entry. So the reversal bar starts the pattern. It's not the entry. You'll be able to define where the retracement is most likely to go using the trigger lines, the large trigger lines. And on your entry chart, there are 2 sets of large trigger lines. There's one from the large chart, one from the small chart. These work together to define where the market is most likely to retrace. But trigger lines aren't bouncy, guys. Trigger lines are not your entry. You're looking for areas, fibs, midbands, or yellow 1-to-1s inside of triggers. The same way on a large chart, these areas can stop a trend. This is what we're relying on to create a bounce to continue with the trend. So areas, fibs, midbands, yellow 1-to-1s, and the most important word for defining entry is inside of those trigger lines. And sometimes there's multiples. It'll create a window, like a window of opportunity, I like to call it. And the market may bounce from the highest point. The market may bounce from the lowest point. But because of your large chart advantages, because of the momentum, because of that clear path, your job is to study this pattern, develop the courage, and enter a tick or 2 above the highest point of support, closest to the reversal bar. This becomes your entry for the highest probability trend trade. Any lines, whether it's a fib, a midband, or a yellow 1-to-1, once the market gets below the trigger lines where it's most likely to retrace, if it's able to blow through areas inside of triggers, guys, nothing below those triggers is an entry. Nothing below those triggers is where the advantage of rule number 3 is in play. I actually call this where the market shouldn't go. This is the wrong side of the triggers, guys. So reversal bar, define the retracement zone, pinpoint where it's most likely to bounce, trust your methodology, activate a limit order at the highest point of support. My new favorite phrase is that trading futures is like eating from both sides of the buffet, right? We can go up or down. We can go long or short. We can make money no matter what. I had someone ask me yesterday, hey Mark, with all this volatility in the market, is it difficult to trade? And my answer is always, the more the better. The more ups and downs, the more opportunities for you guys in future. So when the large chart is down, when the momentum is strong, when the path is clear, I literally talk myself into the ground making sure large chart advantages are there. My job is to wait for a reversal bar. The reversal bar signals the beginning of the fight. It is not at all my entry, but it gets me looking for my entry. And if we're being completely honest, you'll start looking for your entry when the market is all the way over here. We'll do one together and I'll show you what I mean. Reversal bar starts the pattern, the beginning of the pullback. I know precisely where the pullback is most likely to go using these large triggers. Somewhere from the bottom to the top is the most likely area for the retracement. Fibs, midbands, yellow 1-to-1s inside of that retracement zone are where the market is most likely to bounce. The market is throwing a tennis ball, and your areas inside of triggers are the brick wall, guys. You're going to activate your limit order just below that lowest point of resistance, closest to the reversal bar. This becomes your entry for the highest probability trend trade. And it's important that you remember the phrase, buy or sell a pullback at an area inside of triggers. Because if you get in at the triggers, your risk will be more. If you don't have an area, you don't have anything to stop the market. So make sure you write that down. Make sure you commit to that phrase. Any line on the wrong side of the triggers, beyond the retracement zone, not a part of the window, guys. Entries don't come from the wrong side of the triggers, because when you get to the wrong side of the triggers, you don't know if, when, or where the market is going to go up or down. So we're going to use that concept. You guys being so smart, defining momentum, being brilliant, assuring that there's a clear path, and being spot on with your accuracy, defining where the market is most likely to continue, you have already defined where the market should not go. The market should not go about 5 ticks beyond those triggers. And if it does, you don't know if, when, or where the market is going to continue in the direction of the large chart trend. This, where the market should not go, is where initial stops will be placed. And remember, anything that wins 70 to 80% of the time is going to lose 20 to 30% of the time. Anything that wins 70 to 80% of the time is obligated to lose 20 to 30% of the time. Guys, this is a cost of doing business. But because the methodology is so precise, you can minimize your losers. You can make your losers smaller. And because it is so precise, when you get a reversal bar in the direction of your trend, guys, you're going to reduce risk even more. And it's not uncommon to see you guys buying and selling the low and high tick, having $30 to $40 of risk on a trade that has the potential to make hundreds. And that's exactly what we're using this small chart for. How do you develop trust? Oh, that's the hard part, guys. Mark, you've got to be bat crap crazy thinking I'm going to buy a market on the way down. You're going to trust it, and you're going to go back and study this. And that's what creates the trust, guys. So when the large chart says up, does everybody see the background? It's green. When the large chart has odds favorable momentum, strong triggers, when the large chart, and I'm going to do it just like this, has room to trouble, and at least 3 triggers through the previous trouble. 2 triggers through the previous trouble. 4 triggers above the previous trouble, guys. The market will be trading all the way up here at 97.05. Your fear of missing out will be full tilt boogie going into this trade. And then the magic happens. There's your reversal bar. All the way up here at 97.05, guys, where you have a whopping $80. Ooh, that's really big. You have a whopping $80 of profit potential to get to that trouble area. Does everybody see it? Large chart says go, right? It's trading all the way up here. There's no room. I can't make any money like that. Guys, if you circle this tail on the large chart, you don't see this tail yet. The market looks just like every one of these bars. This tail is your pullback to an area inside of triggers. The profit potential from this perfect entry is about $320, not the $80 that you thought it was. Because you wait for the area inside of triggers, your risk is minimized. You'll have the least amount of risk. That's the wrong one. There we go. Because you wait for the pullback. When it goes in the direction of your trade, you'll have even less risk. So you're going to be able to study this look, guys. You're going to be able to go back on a large chart. Dun, 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 and we have our circles on here, right? So circle those tails when the rules are met, when the potential is there, when the triggers are strong. Go back on your small chart. Bum, bum, bum. Where's that tail? Pulls right back to areas inside of triggers. Do you guys see it? I'll make it bigger. There's your pattern. This is today's crude oil market. I didn't handpick this, guys. This is a pattern that will repeat itself daily. Right back to the mid-band, right inside of the retracement zone. One more just for good measure. Holy crap, to the tick at the area inside of triggers. Your job as a brand new user, your job as somebody that's not finding the success that they want yet, is to learn 3 simple rules. Identify 3 simple advantages and know that you have the best of the best. Learn how to not hesitate. Hesitation is hard, guys. The hardest thing about being a day trader isn't learning to identify momentum, clear path, and entry. It's doing absolutely nothing when there's nothing to do, or it's taking the entry without talking yourself out of it because you're afraid of losing. So keep it very pragmatic, keep it focused. This is exactly how you're going to get to where you want to be fastest. Post in the room, ask for help. Trading View, it's a different look. Trading View uses minute charts, not Renko charts. Trading View still uses two charts, still uses a big chart and a small chart. It still uses large crowd, small crowd. Your large chart is a 15-minute chart. It will define direction, momentum, key targets, termination. It has the same role as it does in Renko. Your 1-minute chart will define immediate strength. It'll define your entry points. Big chart, little chart. Large chart rules must be met to go look for a small chart entry. The areas are the same. You're going to see yellow 1-to-1s. You're going to see divergence highs and lows. You're going to see a mid-band. The only indicator difference in TV is the zones, guys. These are supply and demand zones. We've done a lot of research. Chart Prime has the best. They're the most accurate. There are free versions. You can look them up. You can find them on TradingView. I pay the $50 for Chart Prime because to me it gives me the highest chance of success, and this is my job. That's the only difference. They'll behave just like fibs, guys. Support and resistance. Because they're minute bars, because they're so slow, you will have to read these charts a little different. In the KISS plan that I gave you guys, it's a very minimalistic workspace. I've taken the large triggers off because they're not important. I've taken the colors off because they're not important. Mike M, I run as many as it gives me. I just run the indicator. I don't have any input on them. They just show up and they adjust throughout the day. It is 100% hassle free. I don't even know. I know how to do supply and demand zones like on my own. I don't know the methodology that they use. I don't know the calculations that they use. I don't know the time frames that they use. What I do know is that when I run that Chart Prime, these things are solid. Look how it stopped almost at the tick in that zone, right? Did it there as well. So I didn't have any input on these. No, I don't change anything. I'm not that smart, Mike. Man, I hate to admit that. I'm not smart enough to adjust settings. I just let them run, and then I follow my plan. It takes a lot of the work out, doesn't it? It's the Renko workspaces are the same. I see people fiddle with them all the time. And guys, you got to remember, John Novak spent decades working to give you the best possible example. But do your thing. Always do your thing. Guys, because the 15-minute is such a big slow chart, we're going to read it different. Instead of looking for background color, direction of the triggers is the direction of the trade. Whether it's up or down, those are the only options. And we had a great example this morning. I'll open the picture. Guys, you should be able to look at the triggers and say up or down. It should be clear. It should be without hesitation. There should be no indecision or guesswork. And if you can't tell if they want to be up or down, guess what? They're neither. You don't have direction. And if you don't have direction, you should just say to yourself, I don't know which way to go. I choose to do nothing. So up or down lets you know which way you're going to be headed. And then the relationship of the current price. And it's important that you understand it is the current price, the most active price, right there, highlighted. Where is it in relationship to those triggers? So here's my trigger lines, guys. It kind of blew it up. There's three options. There is left of the triggers, right of the triggers, or inside of the triggers on your most current price. Not the tails, not the close of the bar. This is a 15-minute bar. It could change 100 points in the course of one bar. The most current price is either strong on the left side, weak on the right side, or transition in the middle. There it is in an uptrend. Here it is in a downtrend. It's either strong, it's either transition, or it's weak. And I want you guys to see here on this one bar, it was strong, it was transition, and it was weak. So we're going to use the most current bar, or the most current price. And then the location is going to help you with management. The location is going to help you identify strength. If you are on the strong side, if you are left of those small triggers, you have the best of the best look. This is odds favorable momentum, guys. This is where the push is, and this is where 1 minute areas are most likely to break. If you are in the transition inside of those triggers, neither strong nor weak, guys, you're going to be aware, you're going to manage, you're going to protect yourself when you come into those 1 minute areas. And if you are right of the smalls on the weak side, this is where getting paid at areas tends to be your best choice, because they are more likely to hold, more likely to create a big ugly bounce. So when you say the market is going up, I'm on the strong side of those triggers, you're going to say, this is my look for bigger moves. This is the best of the best. And then finally, you're going to ask yourself, is my path clear? Do I have room to targets? And once again, because these are 15-minute charts, they may have hit something. We're not counting triggers. We're making sure in the moment we have room to get back to that area to make some money. And if you say, I'm going up, I'm strong side, and I have room, it's time to look for an entry. And there are 2 entries that are on the plan that I give you. There is a momentum style entry, which means that you are on the strong side of those small triggers on the large chart, and you have that odds favorable momentum look on a small chart, and you'll just activate a limit order right at a zone and hope that momentum carries you to the next level. The second entry, and the most common entry, is a trend trade entry, and it means that even if you've broken the area, your triggers are not strong, and typically your small triggers turn against you. Everything says up, and now they're pointed down. Once the small triggers roll down, your job is to identify the zones that are lower, to say this is where the market is most likely to pull back. This is where the difference between Renko and TradingView comes in. We are not buying a pullback at an area. We are letting the market pull back to an area and then taking a close on the correct side of the triggers. And we're getting to the weak side of the small triggers that are against us. And that's your trend trade entry, guys. And this little bit of patience keeps you from getting run over by those strong triggers. So just like the KISS plan for NinjaTrader, the KISS plan for TradingView has a checklist for entry, guys. Both of these plans have checklists for entry. It's only 3 things. There's only 3 things you have to figure out to take the best of the best entry, guys. And for the momentum trades, no terminations or zones on the 15-minute chart. Clear path. Strong triggers, 15 strong side, momentum. 1 minute strong triggers, momentum. Momentum and path always comes into play. And if you have these, if it's yes, it's a flow chart. Any pullback to an HVA line or area for entry, and you're going to use that limit order. Looks just like this, guys. Smalls are up, and I want you to get in the habit of going through this process every time. Smalls are up, strong side of the smalls, nothing in the way. Zone breaks, pulls back with strong triggers, buy the zone, ride the momentum. That's your momentum trade. This is about 20% of your trades, maybe. This is going to be less than the trend trade. The trend trade, once again, 15 minutes, not trading in anything, clear path. 1 minute is not trading directly in anything, clear path. Buy or sell a close on the correct side of the small triggers at a 1 minute mid-band zone or area. Small triggers say up, and even though it's transition, I'm still looking for long trades, and I have room to targets. There's nothing in my way. As soon as the small triggers roll, my job is to wait for a pullback to an area. In this case, it was yellow 1-to-1s. Wait for a close on the correct side of the triggers, and ride that trend up. And hopefully it produces a winner. It's a pattern that wins more than it loses. And guys, regardless of which plan you're on, there will be trend trades. There will be momentum trades. There will be good trades. There will be bad trades, guys. There will be great trades that lose. That's the cost of doing business. There will be horrible trades that win. That's the market trying to seduce you into breaking your rules and giving up your edge, because every time you enter on a bad trade, there is somebody on the other side of that trade thankful that you did, so they can take your money and make profits. You're in control of the entry. Know what's working for you and against you, guys. Make good decisions. And that's where I come in. I teach you to read the indicators. I teach you to make your own decisions. I don't tell you when to enter. I don't tell you when to exit. But I will give you feedback on everything you present that will help you build your own plan eventually. Both plans presented in the room are designed to optimize your chances of success. Both plans in the room are a stepping stone in your learning journey. And guys, that's my first hour. I'm going to take about 5 minutes. When I come back, we're going to click on charts that were presented. We're going to look at the live market. If, boom, 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 I've got to get my ATM in there. If the rules are met from one of those plans, we'll take a trade live. But remember, 90% of our day is doing nothing, which means that we could watch the market for 3 hours together and do absolutely nothing. So the classroom will be more exciting and more informative if you start asking the questions that are on your mind. I'll be back in about 5 minutes, guys. Um, Opening up my S&P charts too. I did a complete rebuild this morning where I started with all new workspaces. So let's do a quick look. All right, guys, what direction are the small triggers on my large chart? Let's see if we can get a good trading view read in there. Up or down? They're down, right? Perfect. Come on, cheeseburger index. I love it. So guys, am I strong side, which would have to be left? Am I transition inside? Or is that most current price on the weak side? It's on the weak side. Does that mean no short trades, guys? Or does that mean be aware, manage them, make sure that you have room to trouble? It means manage. Whoops, that's it. All right, so from where price is at 73, do I have room to get back to trouble? What do you think? Actually, it's probably right there at the VWAP. There's a little bit of room there. There's about 13 points, guys. That's 260 bucks a contract. I love it. And my small triggers turned against me. Does everybody see that? And then it pulled all the way back to zones and areas. And then it closed below, but there wasn't any room to targets. And then it closed lower again, and there wasn't any room to targets. And sure enough, that area created a bounce. Does that make sense, everybody? 100% looking for a short trade. The only challenge with this trade is I just didn't have anywhere to go. And guys, I need room to targets. That's my plan. Says don't trade into something that could create a bounce. The first one didn't. So most of us get this instant remorse. Damn it, it didn't create a bounce. I could have been in that trade, and we choose to take the next trade without room. We're like, well, I'll show it, and sure enough, there's that big ugly bounce, and we lose money. So it's a market that trades billions. You need to find 400 to create a six-figure income. And guys, look at the bounce. Crazy, isn't it? But now we're getting excited because if these triggers roll up, I'll be on the strong side. I'll have room to trouble, and we'll just look for a long trade because we can make it both directions. Let me pull my S&P over real quick. Every time I reload and do fresh charts and everything, it puts it on the wrong monitor. I don't know why. I blame John Novak. All right, so what's our most current S&P? When the triggers look like that, what do we call that? That is a go make a sandwich pattern, Jen. That is a go play with the cats, pet the dog, love on your child, text your spouse and tell him you think he's neato look. If you can't tell if they're up or down, are they up or down? Right? If it's not obvious that they're up, why call it up, right? If it's not obvious whether they're going to go up or down, guys, I do absolutely nothing. I can't tell. And this was that picture that we had earlier, right? This is where your brain, Jen, and not just Jen, everybody, this is an awesome question. This is where your brain will say, whoops, but I think it's going to go up. Man, that was wrong again. I think it's going to go up. I hope that it goes down. I wish that it would go up. I want it to go down. And guys, you'll take a trade in whatever direction your brain wishes it would go. There's no decisiveness there. You think they're rolling, yeah. And maybe they will, or maybe they won't. And Victor and I were having the same conversation up here. And right about here, Victor said, man, and if they roll up, we're going to look for longs, right? And he said, if they roll down, we'll look for shorts. And sure enough, the short happened. And guys, it's okay to wait. You have 12 minutes until you're sure 100% what direction these are going. But because we're coming from a termination, because all of these indicators are up, you can say, all right, maybe it's leaning up, maybe these will end up, but I'll wait a minute. I'll wait and see what they do. S&P, guys, strong triggers. It's railing. So let's do this. Let's do the read. Is there separation between the small and large? Is everything green? Are they pointed up? Guys, can we agree that rule number 1 is met on a large chart? What do you think? And if you're not sure, tell me you're not sure. We'll go back to momentum, that separation. Guys, the momentum is still there. Since nobody's participating, the path is not clear. I don't care what this chart looks like. This isn't giving me what I need to look for an entry. All right, I'm going to scroll up to the top, and we're going to see the trades that you guys posted. We're going to see what you did. I'm going to click on every link that's been handed to me this morning. If I miss a link that you needed feedback on, guys, do me a favor. Just let me know. If I missed a link that you're just bragging and showing off and you don't really need feedback, guys, there's no need to make me chase it. If I missed something that you needed help on, guys, don't let me get away with not giving you the feedback that you need. And I want you guys to brag in this room. I want you guys to show me the profits you're making. I want you guys to let me know what you see, what you're doing, what's good, what's bad. I want to have conversations about everything. Everything you need to have a conversation about. Almost there. Almost there, guys. I love it. You guys are posting a lot of pictures. A lot of feedback coming. All right, we're going to start at the beginning. So here's what I want to remind you guys. I'm not the trade police. I refuse to be the trade police. Not my job. My job is to read your charts the way it's taught in this room. Weak bottom. And what a weak bottom means is that it wasn't a termination condition that reversed it. Triggers got through. So weak bottom. Triggers rolled up, separated, odds favorable momentum. 50% of his trigger lines are through, 50% are not. Because of the momentum, because he's above the areas, that's a beautiful momentum trade. Pete says, with this look and the potential to break, I'm going to grab $100 twice, right? I'm going to grab $100. I'm going to take a base hit. I'm going to make a little bit of money. And guys, this is a look that a lot of you are using to fill the time in between trend trades, grabbing hold of all the momentum with nothing in the way, making small, quick profits, and getting the hell out before anything changes. This is Ron's trade. All the momentum, nothing in the way, jumping in with a clear path, jumping out, base, hit. Have you guys seen Moneyball with Brad Pitt? If you haven't, watch it. Watch it with your wife. She'll appreciate it because, heck, Brad Pitt. Guys, it is based on the idea that base hits win games, that base hits add up, that getting on base is more important than a home run. Ron created this trade. Ron, prepare to blush. Ron created this trade based on his understanding of momentum and path that he got from the high probability trend trade. Ron created a trade that he calls the chili dog, that has everything to do with allowing price to get away from the decision-making zone, to have the momentum needed where the odds are favorable for it to continue, and then capitalizing on small, quick profits that add up over time. Base hits pay bills. Guys, this is the chili dog. If you have a Christmas card list, put Ron C on it, because he's taught a lot of you how to make a lot of money in a very short period of time based on everything we talk about. I always give credit where credit is due, guys. There are no original ideas. It's just obscurity of reference, right? All right. This says this was an FOMC bump that took about 30 seconds, broke the term, clear path, no momentum, and you grabbed it. You took the FOMC trade. I don't know who this was. I don't know who this was. Guys, if you're trading, Pete, If you're, you know what? You do you, man. You do you. FOMC is so violent that your charts won't register every move within that move. Pete, I have taken long trades, been stopped out for $1,500, and my chart never looked any different than this during FOMC. NinjaTrader can't even. And guys, most of your prop firms will cancel your accounts for trading during red flag news. Just saying. You got lucky. You got lucky. I'm glad you did. Way to get lucky. And then just more FOMC. So 12 minutes into it, you have a better idea what's going on. But if you guys were watching it yesterday, my true phrase came out of my mouth to my brother was, this market is ape shit nuts. It's too fast to trade. Pete, it wasn't too fast to trade for you. Great job. You made money again. As long as you can read your charts and make decisions, guys, that's all you need. Some of us read it faster than others. Pete reads it faster than me. I'm a little special. Weak triggers, 3 divergences. Pete says everything's pointing down. I'm going to ride the wave down again. Absolutely crushing. Right? This is in the morning. This is 6 o'clock in the morning. 6:45. Odds favorable. Right? On his big chart, he's got a little bit of room. So he gets paid right at trouble. Let's trouble break. Oh, I love this. Guys, I want you to see this. Everything says down and Pete gets in. And Pete says, egads and little fishes, these are where decisions are made. Let me get paid. And then when it breaks below it, let me make more money. Recognizing where decisions are made. Nicely done, Pete. It's the Pete show, right? Odds favorable, nothing in the way. Let's jump in. Let's get paid up to trouble. Pete, it's getting boring. Momentum and path. Can it really be that easy, Pete? When the market is screaming, when you've got room to targets, you can find a way to make a few hundred, get out, go find the next 100. I love it. That's not a high probability trend trade, guys. That's the ability to read your indicators and make a calculated decision based on the advantages that you see. I told someone yesterday, said, man, I said, you're getting good at understanding advantages, and even though your trades don't follow my super simple, boring plan, they're rooted in advantages. And guys, it pays dividends. Triggers down, strong side, room to trouble, pull back to the area, close below, $1,080. $1,080. This was you, right, Andy? I can't find anything wrong with this trade. Look at the annotation. Triggers down, strong side, room to trouble, didn't enter, didn't enter, didn't enter, didn't enter, boom, close below, just a little bit late. 2 contracts to 87.30. $1,080. So one of the things that I do, guys, is I'm going to do the highlight reels. Yesterday didn't get one because of FOMC. I'm going to steal y'all's pictures, guys. They're going to go up on social media. You guys are going to see your highlight reels. If you are on social media, guys, go follow us. Give us a follow. Share us. Let the world know. If you are using the software and love it, if you're using the funding company and love it, go leave reviews, guys. As the funding company grows, we could really use your help with that. All right, Victor. Small triggers up, price on the strong side, path is clear, small chart rolls, price closes on correct side, eventually stops you out. Traded 1 contract by mistake, good job, good rules-based trade, I'm sure of it. We'll wait for Mark's feedback. Can see things all other mortals can't. Victor, guys, I want you to see something. And this is beautiful. And I'm going to tell you, I took the exact same trade that Victor took this morning. I took the exact same entry. I held for the exact same amount of time. And I got stopped out at the exact same spot. And there was one flaw in our analysis, Victor. And guys, I'm human. I make mistakes too. Price didn't reach the area. Price didn't get to the zone. Guys, it closed above from the middle of nowhere. And guess what? It finished the move back to the zone that it wanted to go to. Victor, you and I made the exact same mistake in our analysis because we got so excited about the trade. I took almost a $700 loser on a 4-lot on that exact same trade, Victor. And when I posted in the room, I said I would stand by that trade 100%. And then when I went back and looked at it, guys, I realized that I'd made a mistake. Self-analysis is huge. It is huge. And Victor, we both made a mistake. It was so close, but not perfect. I love making mistakes, guys, because I don't make the same mistake twice in the same day. I'll make it again tomorrow. All right, strong top, market down, no momentum. There is a clear path, so relying on the small chart momentum to push the market down. Nicely done. Momentum and path. And then when it doesn't keep pushing down, it turns into the perfect trend trade, and it continues down. Nicely done. Once again, Pete, taking the very basic core rules and finding a way to capitalize. This is one of my favorite pictures. This is one of my favorite pictures that you guys could ever post in my room. The large chart read is strong as smalls down. The large chart read is strong side, room to trouble, 100% perfect. Let's go look for an entry. No room. Absolutely no room. No trade. Jen, great job. Sitting on your hands instead of hoping the market does what you want it to do. Strong trending market, so the momentum is assumed. Clear path. Now here's the challenge, and I'm not sure who this was, and I think that this was Cav. One of the things that you'll find, my friends, is that when you are on the wrong side of the triggers, you don't know if, when, or where that market is going to continue down. Now Cav, you can say if price pulls back to resistance and all the triggers are below, it's more likely to hold, right? One of the great things that you guys can do, and Cav, I'm not telling you what to do, but this is a surefire way to not just get absolutely run over from the wrong side of the triggers. You can wait for confirmation from the areas that you're hoping will hold. Instead of hoping it holds completely, you can say, oh man, it held. And then ride down with that trade. It's completely up to you, but guys, when you are on the wrong side, using that confirmation bar, that reversal bar, it gives you a place to put your stop. It says that the sellers are back in control. It really does raise that opportunity. It really does keep you from getting run over. And Cav, the very basic termination condition rules, if price reaches resistance, if all the triggers are below, it's more likely to hold than break, and you did it beautifully. Let me say that. Let me sing praises. You use the language from rule number 2 to understand that fib was most likely to hold, more likely to hold. But one of the things that you'll find, man, look at that strong trend. And let me see if I can find an example. I thought there was one. Maybe it was crude oil. Let me get back and let me go to crude oil real quick. That's my untitled. Because I believe that there was one this morning that would have been a loser without question. It was such a beautiful look. Right here, I'm going to circle it. Do you guys see how that had odds favorable momentum? How the path was clear, how life was good right here, right? Let me go back and see what that looked like. And it was definitely a loser if you took it. That's me getting excited. Man, guys, this is what happens when things just work out. And if you're on NinjaTrader, guys, I encourage you to play along with me right now. Do I have strong triggers? Rule number one. Guys, right where the circle is. The answer is yes. Do I have a clear path? Once again, yes. Now watch this. I'm going to use the language for rule number 3. Pull back to an area inside of triggers. And guys, remember when I said that right there was the most important word in the whole phrase, inside of triggers? Do you guys see how the midband is below the triggers, on the wrong side of the triggers, not inside of the retracement zone? And do you see how the market absolutely decimated all upward progress? Pretty cool, right? Was that an aha moment, Shane? If you learn this language, that's an avoidable loser. And look what it did. Just not a snowball's chance of victory there. This is why I say once you get below the triggers, you don't know if, when, or where the market is most likely to continue up. And that's why Cav has to hear me nag that once you get to the wrong side of the triggers, you don't know if, when, or where the market is going to continue up. The midband, so Victor, great question. And let me go back to language. Open up, dagnabbit. The language is, guys, the rule says, I will buy a pullback at an area inside of triggers. And it's so important that you guys learn that phrase. Because watch this. Let's go back. And let's do it this way. You guys want to define your entry? Can't expect the tennis ball to come back if there's no wall to bounce off of. Amen, Morgan. So we have momentum, right? And we do have path, right? And the market's going up. Let me bring it down a little bit. The market's going up. Boom, 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 boom. Let's get rid of that cheater circle. And what are we waiting for, guys? We're waiting for a pullback. We're waiting for a reversal bar. Do, 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 do. There we go. There's our reversal bar. So the language is buy or sell a pullback at the area inside of triggers, right? So when I get this reversal bar, and even before the reversal bar, I know that the retracement is most likely to occur somewhere from the top to the bottom of the triggers. Is everybody with me on that? This big shaded area is where the retracement is most likely to occur. The language, and I love the language. I'm a big language nerd. Pull back to an area inside of triggers. So don't focus on the areas, guys. Focus on the triggers. Is there any fib, mid-band, or yellow 1-to-1 inside of those triggers? No. Rule number 3 is not met. And because rule number 3 wasn't met, if you entered at a mid-band outside of triggers, if you entered at a fib outside of triggers, if you said, well, that fib has to hold because all the triggers are above it, you took a big ugly loser. And guys, if your stop belongs 5 ticks below the triggers, how could you possibly enter where your stop belongs? Sat it out yesterday. You learned your FOMC lesson and didn't want your eyes to cross. Made it back today. Going to go out while it's nice. 81. Enjoy your afternoon, Ron. Guys, there's 2 types of people in the world. The people that have lost their asses in FOMC and the people that will. Need the asset to telegraph its intention to bounce off. Pullback is the key. Marlon, you have to have something to bounce from, right? and it needs to be inside of triggers. So this is why I said earlier, you could take this trade with a reversal bar up from the area. You could wait for that confirmation and then take the trade. But if you don't just arbitrarily jump in, you're going to avoid a lot of losers. Guys, that was a great lesson for my Ninja Trader people, because we've all lost from the wrong side. Weak top, triggers down, 3 terms. Is it, broke 3 terms, clear path, pull back to an area inside of triggers, and down it goes. Without momentum, 2 out of 3, medium probability. All the momentum, not a great large chart, not a lot of room to make money, but you still made money, nicely done. Guys, you'll always notice that when people are making money, they'll show their P&L. When people aren't making money, they'll hide their P&L. It's always one of the things that amuses me. Master B, no annotations, not sure what was going on, but you just said I'm starting to recognize advantages. I love that you were. All right, Andy, this looks like yours, or is this Victor? This is Victor. Triggers changed after reaching the mid-band. Entry 1, entry 2, either would be good on the move. So entry 1, Victor, doesn't have any room directly into an area. Entry 2 has all the room in the world, right? Get in below, and that zone recalculated after, I remember, and that was your entry, and it just didn't stop. Great job. Triggers wide, below the red fib, directly into a termination condition. Do you guys see it? 100%. Cav, I have to do it because this is a learning class. I have to do it. And guys, just because I point out challenges doesn't mean that I hate you, doesn't mean that I'm beating you up. Rule number 1 is met. Directly into a termination condition, 100%. Entry from the wrong side of triggers, 100%. Cav's doing it again. With every indicator down below resistance, resistance is most likely to hold. Because of my time in the saddle, I'm willing to take a shot, and I'll get paid on this medium probability trade. Nicely done, Cav. Guys, you don't have to fit the plan to take great trades. You just got to know what you're up against. You got to learn some basics. And then you start finding ways outside. All right, chart read. Triggers down, strong. There's your trouble at 88, but you had room. Set up for an entry on the outer band for momentum trade. I've seen this many times now. Just missed doing this one. First profit, second profit. So, Andy, what you're beginning to recognize is that when price is outside of the outer band behaves as resistance very often. And when the rules are met, you can use it to trade with strong chart over here. Great recognition, great chart read, Andy. And this is another reason. Can I go to the other side of this? This is another reason that if you try to go long from outside of that outer band, it's more likely to lose. Andy, this is a great read. Nicely done. All right, Master B, triggers are down. Yeah, they are. First pullback. Look at that. Beautiful. The first pullback didn't have an area. Didn't reach it, right? First entry with pullback on right side of large triggers. Master B, can we adjust language just a little bit for you? Pull back to an area inside of triggers. That's your recipe for success. Pull back to an area inside of triggers. And this one just didn't make the area. And this is one of the saddest moments in trading for new users, because you have to say, dagnabbit, it's just not my money. My entry is specific. My plan is amazing. My rules are rock solid. And if they don't give you exactly what your rules tell you they have to give you, It's okay to not be in that trade, Master B. This one would fall under that not my money. But here's the beautiful thing about the market. They came back for you, right in an area, inside of triggers, and then they continue down. And then the runner finally gets stopped out with the 3 divergences. Perfect chart read. First one didn't get you. Second one was rock star, made all the money. Great job, Master B. It's fun to watch you guys go from I'm not sure to oh my gosh, look at this. Life is getting good. It's getting easier. It's becoming clearer. Everything is starting to pan out. I don't have as many questions as I used to have because the advantages are beginning to present themselves. And guys, that's what trading is. All right. Andy V. Entry at 36.75, which would be, Andy V, directly into a zone on the large chart. Did you recognize it? Strong triggers, smalls are down. It looks like you're on the weak side of the small triggers. Am I reading that correctly? I just want to make sure. I don't want to become a liar here. There's your smalls, and I'll do the old trick where you put the lines on. So if I extend your smalls, I don't know that that's the strong side, Andy, is it? Half of it's on the weak side, transition at best, right? So, smalls down, weak side, no room to trouble. I'm gonna give you this back in the room. Down, weak, no room. It's your right to take this trade. The entry is perfect. It is not past trouble. It is directly into trouble, right? And Andy, you said with all of this going on, I'm willing to take a shot and I'll get out of trouble. So if we were being sticklers, right? If I were the trade police, Andy, I would say this trade was void of momentum, no clear path. You relied on the small chart entry pattern to trump large chart problems. Does that make sense? You relied on a small chart entry pattern to trump the large chart. This time it did. You remember when I said, guys, great trades will fail. Amazing trades will fail. Beautiful trades will fail. High probability trades will fail. Guys, trades without advantages will win every now and then. Trades without advantages will put $620 into your account. So what I want you guys to ask yourself is, rather than saying, what was the result? I want you to ask yourself, did I have an edge? Did I have an advantage? Is this a pattern that I could prove wins more than it loses? Is trading in determination conditions more likely to produce a winner, or is trading in determination conditions more likely to produce a loser? And guys, I won't tell you how to trade. I refuse to. But what happens very often is we take our chances into these areas. We hope that the market gives us something that the large chart doesn't say that it will. And we're going to get away with them every now and then. So Andy, I hope that doesn't sound like I'm busting your chops. You're in charge of your decisions, right? You're in charge of what you do. I just like to make sure you know what you're up against. Cool. I'm always afraid that I'm beating on you guys, and I promise that I never am. My job is to go through the chart read and let you know if I think you got lucky. I think you got lucky. But you know what? I love luck. I do love luck. Guys, I get lucky sometimes. Hate to admit that. I get lucky sometimes. We all do. We love luck. Luck's amazing, but luck's a horrible plan. All right, Victor. My precious trade. Triggers are up. Price on the strong side, clear path, 1 minute chart. Price closes on the correct side of the small triggers. Wrote it for money. So that was your close on the correct side, right, Victor? You could have said this one was. It's pretty tight. And with all of those advantages and nothing in the way, the market just went up. Strong side of the triggers, nothing in the way. Close on the correct side of the small triggers. And it's using all of these zones for a bounce. Beautiful, Victor. Outstanding, nicely done. Miss Jen, same trade, same money. Beautiful. 2 different time zones, 2 different genders, 2 different backgrounds, the exact same trade, and both of you got paid on it. I don't care who you are, where you're from, what you do, what you've done. Trading is about advantages. It's about having an edge. And they always show up, guys. The trades always show up. Sometimes not as quickly as we want them to. Outstanding, both of you. And Mike says, I'm riding this one. I love it. Let's get some Hall of Famers here, right? Let's get some into that Hall of Fame. It's going to be a good highlight reel today, guys. It's going to be a great highlight reel today. Nicely done. Let's go do some large chart reads. This is gold. Oh, Jen, that was sweet. So let's read gold real quick. What direction are the small triggers? We'll make it huge. Let's see if we can put these behind. Visual order, send to the back. There we go. This may help. Andy, something about the gold chart doesn't have the bars go in front of it. So if you click on them and go to settings, or not even settings, you can send them to the back and you'll be able to see the triggers better. I learned that the other day. So they're down, but Victor says, hey, they're starting to pinch. Victor, this is still down. When they're undefined, they're going to look more like that. Does that make sense? They're going to be flat. They're not going to be wide. You're about 3 bars away from undefined. So the triggers are still down. We are on the weak side very much. And do you see how we're in the zone though? Which means we don't have any room to the bottom of the zone, which means that if you're going to take an entry, guys, and you really want a clear path, your close on the correct side of the triggers needs to be below the bottom of that zone. And if it's not, you're in a spot for consolidation. You're in a spot that could create big, ugly bounces. So I'm waiting. Let's see if we can get paper trading one, right? I don't trade gold. No offense, Andy. I think gold is absolutely psychotic and I don't trade it. I think it's every bit as temperamental as the NASDAQ. And I don't have the experience on TradingView yet because I just don't trade it. But what I'm finding is the same way NASDAQ tends to slow down and not be so chaotic on TradingView. I think you're showing us today that gold is very similar. These minute bars slow down and take a lot of the psychosis out of the market, which is kind of nice. So with the triggers down, right, with room to targets, what are we waiting for, guys? My small triggers turned against me. If I get a close on the correct side of the triggers, can I take a trend trade short? What do you think? You feel good about it? I even have all the colors on here. Does it fit the plan? That's my only question when I look to enter the market. Can I justify it? Can I look at my trading view plan? Does it fit my checklist? 15-minute, not trading into an area, 1-to-1. We defined where it would have to get below. 1 minute with room, buy or sell at close on the correct side of the triggers. So that's my checklist. What am I waiting for? That close on the correct side of the triggers. But Victor, look, now we're starting to tighten up, right? Now we're starting to tighten up. Now we're way above trouble. Does everybody see it? My trade's off the table. Don't even want it. Done. Don't care. Boo. How many triggers made it above the fib, ladies and gentlemen? What do you think? All the momentum. How many triggers made it above that fib? Just count them. 2. Chariot, is that the best look for a break? No. One of the things that I've realized is when I pull my opinions out of the market and I follow a plan, I start saying things like, that's not my best look. And let me show you guys something cool. When you look at the KISS plan for NinjaTrader, guys, and you go to that, it's called a 50-50 trade. It says 1 area not broken, 3 of the 4 trigger lines through. That's how it starts. It needs to come from a strong top or bottom. That's that termination that reverses the market. You have to have strong triggers on both charts. And this is the kicker right here, guys. No divergence on the 5-1 chart. Does everybody remember that divergence is a loss of momentum? That divergence means that the market is losing momentum at that pivot. And let me show you how that comes into play for this trade. If a trade is momentum, clear path and entry. Right now, the momentum is present, right? Right now on the large chart, that momentum was present. That clear path was not. It was only the potential. And I could define an entry area. Pretty cool, right? So we just go through it back to the very core of the basics. Guys, if divergence is a loss of momentum, I'm losing that advantage that I'm relying on to break that area. If it's already not my best look, and my small chart is telling me that I'm losing momentum, that I need to break an area that's not my best look, guys, momentum is the biggest killer of that 50-50 trade. And it just pushes down. And you'll see that a lot. When you're saying, oh, 2 triggers are coming through. I don't have strong triggers, right? It didn't make it. That's a termination. Let's find one of those potential breaks. No divergence. And it works. Pretty cool. We saw this one up here. No area inside of triggers. Avoidable loser. And then every now and then, it's going to let you get away with one. Every now and then, it's going to let you get away with one. So it's about probabilities, what's more likely to happen. How are we doing today, guys? How are you guys feeling? It's just rinse and repeat, right? Do I have momentum on my crude oil chart? What do you think? Let's just keep talking through it like we were going to trade this market live. Is rule number 1 met? I love that, Victor. My smalls are down, my large are up. My colors don't match. There's absolutely no way I could ever have strong triggers here. And if I were looking for a long trade, price made it to the fib, all 4 triggers are below it. Do I have a clear path? Nobody believes me that life can be this easy as a day trader. Does anybody not know? Chariot, man, you are my favorite today. Thank you for answering me. Guys, I don't have momentum. I don't have a clear path. It's low probability. The market's on the wrong side of the triggers. Is there any reason, any logical reason, as a brand new user to look for a trade right now? No. You guys want to know the truth? As a brand new user, a lot of you are going to look for that trade. All right. Do I have momentum? Better hurry up, I'm going to miss it. Strong triggers. Mid-band's only a termination condition if the large triggers are a full bar away. So I don't have a termination condition. If I can get a reversal bar and a pullback to the area inside of triggers, ladies and gentlemen, guess what? We have a trade to take. We have a trade that has momentum, that has a clear path, that has a well-defined entry, and guys, it is one line inside of those triggers. It is one line most likely to create a bounce. It is one area. The only thing that I don't have is a pullback to that area. Does that make sense? And as the market goes down, so does my entry area. And if I can just get the fight out of the small crowd before I hit something solid, we will take a short trade because the rules are met. Does that make sense, everybody? If I get a pullback, does it guarantee a win, Shane? Is the market obligated to produce a victory? No. But with this look, what's the likelihood of success? If we're just playing probabilities, what's the potential of a winner? 70 to 80%. I like those odds. And I will chase this mid-band until it is no longer inside of triggers. And guys, I have chased a market for 40 points and never gotten an entry. And Jen, we'll look at yours as soon as we know whether or not they're going to give us an entry here. Because if the rules are met, guys, I want to be in this trade. I want you guys to see just how fast you'll be able to read your charts, just how you will be able to project and call your shots, guys. There is one line inside of triggers. There is one spot where this market is most likely to bounce. And it looks like, and I'm hopeful, that the small crowd puts up a fight, that they try to push up, that maybe some sellers take profits, that the buyers try to make it go up. And I hope they hit their heads right on that mid-band and everything continues down. And guys, if we get an entry, we will manage this per the KISS plan, which means that our stop, before the market ever gives us an entry, I know exactly where my stop belongs, right where the market shouldn't go. I know exactly where the advantage of rule number 3 is no longer in play. And we will take profits at $100 and $200 if we're given the opportunity. And if we get our entry, guys, I will not touch my stop. They will have to come get me. If we get a reversal bar in the direction of our trade, we will reduce risk behind that reversal bar. Profits will be predetermined at $100 and $200. Is everybody with me? First it's momentum, then it's path. Define your entry, and you either get it or you don't, guys. Whew. I see a lot of people jump in right here. Oh no, it's going without me. I've done it. Remember, we're just trading a pattern, guys. That's it. It's just a pattern. Looks like they're coming back for you. We're in. There's your reversal bar, reduce risk. There's your first profit, break even. How quick was that? And now there's nothing to do. They either get our second profit target or they stop us out break even, guys. And then when you grow a little bit, you'll say, man, if I get a third divergence, I'll exit the trade, which means that your stop can go 2 ticks above that reversal bar marker. And if that divergence never comes true, guess what? They're going to our second targets. And when you guys grow with the software a little bit, you might start putting targets down by fib, saying, wow, this is the perfect trend trade. This is all the advantages. They're more likely to go to that fib than they are to just arbitrarily turn around. Congratulations, my friends. That was a $300 winner that fit the KISS plan perfectly. Are there any questions? Because once you learn this, you'll begin to see the rest of them. Whoops. Let's take a picture. This is where I feel really smart, right? And there may be another one coming. So let's go through. A trade is momentum. A trade is path. A trade is entry, guys. Did I have momentum when I entered? If you're new to Ninja Trader, let me know if you don't understand any of these concepts. Absolutely. Did I have a clear path when I entered this trade? Chariot's like, I am the Ninja King. You're darn right. Did I take a pullback to an area inside of triggers? You're right, 100%. Guys, this is the Ninja Trader high probability trend trade. That was $300. That was $300. We entered at 1047. We exited at 1048. Not a lot of jobs that pay $300 an hour. And look at that. They came right back to an area inside of triggers, but there is one termination condition on a small chart. 3 divergences in the same price range. I choose not to take this trade because of 3 losses of momentum. That's it. 3 minutes of work. And guys, did you see how far I had to chase that trade before I finally got an entry? Your entry is coming, guys. It's just probabilities. It's just patterns. Did I sound panicked? Did I sound worried? Did I sound fearful? No. Why? Because, guys, I have a plan that tells me exactly. Oh, that's the wrong plan. I have a plan that tells me exactly what to do. So Lost NPC, she goes, do you recommend traders use 2 contracts like you do or start with 1? Well, I don't make recommendations, but I can tell you that if you, as a brand new user, and especially you're on simulator, right? You're practicing. And let me go through this. And this is going to be the KISS plan, Shannon, not the trading view plan, because trading view management's a little different. But the management plan and the KISS plan is going to be the same. Putting stops where the market shouldn't go. What does that do? That keeps you from using emotion to manage your trades. But the reason that I believe in 2 contracts, Shannon, is because if you get paid quickly on your first contract, you're learning how to accept money. You're learning how to accept winners. You're learning how to accept that you don't have to hit a home run every trade that you take. And I think that quick profits are freaking amazing. And I think that people that take quick profits don't panic on the second contract. And they let the large chart do what the large chart says it's most likely to do. So while I don't make recommendations, Shannon, absolutely 100% without question, I think that starting with 2 contracts teaches you to build trust on the large chart. And guys, remember when we entered that market and we said, well, where's the market most likely to go? It's still going. We took 300 before the first or the second retracement ever happened. And all it was a pullback to an area inside of triggers. And let's see if they make it to 95.32. And 6 points is an extra $300 in the trade. Does that make sense, Shannon? I'm a big fan of starting with 2 contracts. Be willing to make $100 on the first one. Let the second one run. And when you're on simulator, guys, let them hit your stops. Let them hit your targets, because all you're doing is you're learning how to manage. If you are scared to death on simulator, you are going to pucker a pleat into your leather chair that you will never get out when you go live. Remember, all you're doing is creating muscle memory so that you can find success when it's time to go live. All right, Miss Cindy. Great termination, strong triggers, clear path, pull back to an area inside the triggers, easy freaking money. Miss Cindy, this is beautiful. I'm going to make you famous. Is that your only trade so far today, Cindy? So you're telling me after one trade with all the advantages, you're up $750? Is that possible? Damn right it is. Of course, I love that you say of course. Yes, silly. Guys, know your goals, right? That $300 trade that we took in 1 minute is the path to $75,000 a year, if you can do that every day for a trading year. Cindy's up around that 200, double 6 figures on one trade. If that's all she does today, we'll round down. We'll call it 176. Guys, this is what trading is all about. Trading isn't about hitting the home runs, guys. Trading isn't about being in every tick, every move, every swing, right? Trading is about trading a pattern that you can prove wins more than it loses. So this was today, right, Cindy? You just took this trade today. You didn't go back to 2021. Let me find a short trade. You didn't go back to 2022 and use momentum and path and a pullback to the area inside of triggers. Oh, how ironic to make that $750. 3 years ago, guys. 3 years ago on the NASDAQ December contract. This was John Novak's trade. Doing the exact same thing, the exact same pattern, the exact same results. He did it on the S&P. Cindy, you learned a pattern, right? You executed it flawlessly. Your stop was amazing. You learned how to get paid, and you protected your second contract. Did you notice the big fib? Oh, they almost made it. Where'd your picture go? Sorry. I want to see real quick what the price was. 47.60. Come on over. So Cindy, did you notice that there was a giant blue fib at 47.61? Look at that. Your automated system took it as well, didn't it? Your automated system took it as well. You could have gotten paid at 60 and kept $240 of your profits. You could have gotten out right at that big blue fib, a little bit of discretion, and kept $240 worth of your profits. And suddenly, my dear, you're up $1,000 from that one trade. Does that make sense? So one of the best reasons to take profits, guys, is that you hit an area that could stop the market. Cindy, you gave it a chance to run, right? When I talk about areas with the potential to break, I rely on strong triggers. I rely on strong triggers. Look at that, they almost made it. And if I don't have strong triggers in an area, the area is more likely to hold. If I have weakness, anything can happen. If I don't have strength into an area, the area is more likely to hold. And Cindy, you can use that in your management plan. Guys, we made it. We made it right where we said that trade was most likely to go. My plan said $300. We could have made an extra $300. So Cindy, one of the things you can do on management, I see that you held two, right? I love getting paid at these big blue fibs that stop the market. Leave one runner on. Get paid. And then I'm going to show you something, guys, and this is a picture. This is how I determine on Renko charts whether or not I'm going to hold and how much I'm willing to give back. And Cindy, maybe you'll find this helpful. Maybe you won't. When I get to an area, whether it's up or down, when I get to an area, I'm looking for a close on the wrong side of the triggers. And if I get to an area and I get this close, I know that there could be a pullback. I know that there could be a retracement. And if I never get it, that's when my runner runs. But if I get that close on the wrong side of the triggers, there it is right there. That's it. Jump and ship. Couldn't care less. I'll wait for the next trade because let's be honest, with my Nexgen KISS plan, I'm an absolute badass when it comes to entries. I know the next trade is coming. I know the next trade is coming. Sorry, Miss Jen, I skipped you. Triggers up. Strong side of the triggers. Above trouble. Close on the correct side of the triggers. And you said nowhere to go. Yellow 1-to-1s on the large chart. Oh, so your entry came from below. Right, Jen? It was above and you got super excited and then it pulled below trouble. Wow, what a great read. What a great read. I didn't even notice that. But 64 is directly into an outer band and 1-to-1s. Man, I didn't even see it, Jen. Great job. Stupid yellow 1-to-1s. You know what's funny, Victor, is about 4 years ago, somebody in the room used to say that, stupid 1-to-1s, because they always seem to stop the market. Great read, Miss Jen. Nicely done. Oops, nicely done. All right, strong triggers. Everything says down, just jump in, get paid. Didn't get the short, so you jumped in, get paid, get paid. Nicely done, Pete. Did you catch the easy trend trade? He took the momentum all the way down, just made a bunch of money. Guys, look at that. And Miss Cindy, look what's happening with the weak triggers. Instant reaction, right? What a great place to get paid. You guys are so awesome. You guys are so amazing. I'm going to take a minute. I'm going to walk away. I'm going to stretch my legs, grab a sip of water. Oh my goodness, weak triggers at a fib. Sorry, I hope it doesn't sound condescending when I get excited about this. I am absolutely floored at Fibonacci and how effective it is. Absolutely floored. I hope you guys are too. I really do. All right, guys, I'll be back in 5. When I come back, the classroom belongs to you. We have gone through every picture. I've answered every question. Come up with some new questions for me, guys. I'll see you in 5. Here we go, last hour. Let's see what happens. Victor, you call this one the flash trade. I hope that's because it's fast and not because it's naked. Let's see what happened. Small triggers are up. Price on the weak side of the triggers. Space to the next trouble area. Yes, that stupid yellow dot. We'll manage assertively. 1 minute chart. Price on the right side of triggers. Waited one more bar to be above trouble, and then a new supply and demand area printed. Well, I'm in now, so let's manage. Quickly set second profit target. Move stop loss above entry price to protect profits, and it came and it got me. But all profit from first protected. This is fun stuff. I like it. So Victor, your entry was right here. Do you see it? And I don't know what the price was. Down here at 44. That was your entry. Big Rat, absolutely not, never, ever, ever will we try to friend you, try to offer you to trade for you. It's probably a scam. Please ignore it. Delete it, block it. Victor, does that make sense? That was your entry. Pullback, perfect, close above, in at 44. And I know that these recalculated a little bit, and that may have been why, right? You wait for full trigger switch? Why? You're welcome, Big Rat. Is it because my rules don't work? What does the rules say? Hold on. Victor, you love to make things up, I've noticed. Price closes on the correct side of triggers, right? Not price to close after reversal. You made that up, my friend. Price pulls to an area, close on the correct side. That's it. That's the whole rule. Price pulls to the area, close on the correct side. Darn Spanglish. Lo siento. But that's okay, Victor. This goes back to why is language Cindy. Why is language so important, guys? Why is learning your rules in a definitive statement so important? Because Victor, that is 13 points difference. That is $260 per contract difference between the rules-based entry and the I thought it meant this entry. And I love when you guys do this because this is common. There's this not problem. There's this phenomenon where we create our own truths. And I'm going to give you an example of it real quick. Where we create our own truths. So Victor, this is you just putting me on a tangent because there's not a ton of pictures to look at. I had a gentleman a while back call me. One of the client advisors said, "Hey Mark, this guy's got to talk to you." And I said, "Okay, let's talk." And he said, "Mark, all right, sorry YouTubers and everybody, HR, I apologize." He said, "Mark, you are absolutely full of shit. This plan doesn't work." The KISS plan. We're talking about the KISS plan. He said, "I followed the KISS plan and I am losing every day." So, guys, I always want you to challenge anything that I say. And I want you to say, "Mark, I don't think that's right." And give me the opportunity to clear up any misconceptions. And this is what had happened, guys. Is he was following the KISS plan, and he said, "Mark, I'm following it perfect." And I said, "Well, my friend, you've never posted in the room. I don't know what could be going wrong. If you're following it perfect, it doesn't sound right." So what he did is I asked him, I said, "Do me a favor, send me your last 5 trades. Send me your last 10 trades or something like that. And he sends them to me. And I'm going to go just like this. And I'm going to show you what happened. Dun, dun, dun. He said, Mark, I had the best momentum ever. I had strong triggers. And he said, Mark, the price got below that fib. My path was clear. And Mark, I entered in an area. Now, does everybody in the room see the challenge with his read? Do you guys see that even though he had believed through watching videos that this was momentum, he didn't understand that this was momentum? And because he created his own truth, that the second the price gets below a fib, the path is clear, rather than using the triggers to define that clear path. And then the same lesson we had earlier, guys, a pullback to an area doesn't mean much if it's on the wrong side of the triggers. So what happened is he had created his own truth. This is what these rules mean to me, and now I'm getting my ass kicked. So we took a week in the room, and he said, I'm going to post everything, and we're going to talk about it. We're going to go through the lessons. And in 1 week, we cleared up every misconception that he had about these rules. And he said, all right, I'm going to trade it next week. And I said, that's great. Go trade it next week. He calls me back 7 days later, and he goes, you know what, Mark? And this was such a fun phone call. He goes, respectfully, I was mistaken. Once I understood the rules and followed them properly, he goes, I won 93% of my trades. And then he started adding in the 50-50 trade. And he was breaking this rule over and over and over, no divergence. And he started losing. And he goes, so when I fixed that, 92%. And he did that for 3 or 4 weeks, and then he went off, and now he's a professional trader. So Victor, when you said that, that was a lot just to say. Guys, if something doesn't seem right, if what I say contradicts your belief, let's talk about it. Let's make sure that you get clarity. Because we do that, and then that's normal on anything, right? Well, I thought, well, let's make sure that your thoughts are in line with what the rules say. So, good stuff. Morgan says, just lead the scammers on and mess with them. I love it. Strong triggers. You're welcome, Victor. Thank you for posting in my room. Strong triggers, potential to break, perfect momentum trade, out of trouble. Nicely done, Pete. Waiting to get below, having room to make money to the next. This is the easiest $200 ever, isn't it? $1,400 on the day. Nicely done. Boaz. All the momentum, all clear path, and Boaz, it just didn't give you your entry, did it? Didn't make it? And you said with all this momentum and a clear path, I'll just see if I can ride it up to the fib. Guys, that's what happens. So I like to talk, especially when there's not a lot of pictures. And I want you to see something cool. If Boaz had gotten his pullback to an area inside of triggers, he had this expectation. When they didn't get to his entry, he made a choice to see if it would fulfill expectations, right? Boaz probably had closed below the reversal bar, right? I love it. Making a choice based on advantages. And the only challenge is when you get in here, is there is still the possibility that they'll pull all the way back to here before they go. So you'll be forced into the position, do I hold the trade and accept all of the risk, or do I exit the trade and hope for the next entry? And that's the only thing that I can say about this trade is it forces you into position to make that decision if there's another retracement. Great trade. Do you guys remember when we were waiting for this one? Does that look familiar? They didn't get us. We didn't panic. They came back for us. Good stuff. Great trading, Boaz. All right. Odds favorable momentum. Clear path. If I get a reversal bar, I know precisely where the market is most likely to bounce. At an area inside of triggers. Does that make sense, everybody? Strength, path, area inside of triggers. My stop goes below the triggers where the market shouldn't go. Let's kiss planet again, guys. Let's see if they get us. Are there any questions about why that limit order is sitting there? First, it's momentum. Then it's path. Then it's define your entry. 100% on the KISS plan once again. And they may not come get us. We'll see. Those sons of guns. It's alright, we got a clear path for days. Come on back. Do you know what I love about this though? Is now my risk is even less if they come get me. My risk will be even smaller than it was back here. Any questions about momentum? Do I have any new people in the room? This is the exact same look that we took short right there. Let's see if we can ride it long. And now my 1-to-1s aren't even in the equation, guys. Now it's just a mid-band. I have one line inside of triggers. Welcome, Jess. It's great to have you, Jay. So, Jay, this is what we do every day for a full hour. We talk about momentum. Awesome, guys. It's good to have the new old noobs. We talk about momentum, learning this advantage, strong triggers, separation between the small and large. That's your best of the best look. When you have it, making sure that you haven't reached an area, that you have room to profits. And when you have that, guys, there's very simple language. The market is most likely to continue with the trend, with the momentum, with the clear path from an area inside of these trigger lines. And you will literally call your shot with the limit order. And if they push down and get you, you're in the highest probability trend trade ever. And that is exactly what happened. Boom, boom, boom. Right there. I like that, Master B. You know, in a different life, I was a personal trainer, and I had a client's wife call me once, and I picked up the phone. I'm like, hello. She called from his phone, and she goes, Mark says, Mark says, Mark says. She goes, I am so sick of hearing Mark says, because her husband kept saying, well, Mark says, well, Mark says. Here we go. We'll go 2 ticks above the mid band. If we get filled, our stop will go 5 ticks below the triggers where the market shouldn't go. If we get filled, there we go, and we get a reversal bar, we'll reduce our risk behind the reversal bar. If our first profit target is hit, we'll move to break even. But guys, this is it. This is a pattern that typically wins 70 to 80% of the time. This is a pattern that you can prove typically wins 70 to 80% of the time. This is a pattern that is repeatable, that is testable, that is verifiable. I need one more tick on my stop there to get it 5 ticks below the triggers. And I am at the mercy of the people in control right now. This will either win or lose. I don't know which it'll be. It's either going to give me a reversal bar and I'll reduce risk, or they'll come down and they'll just stop me right out. I'm not in control of that. Does that make sense, everybody? At this point, it's 100% the market's job to either take me out or give me a winner. I've done all I can do. The only thing I've ever been able to do is follow my rules. Make sure that they're met. Make sure that I have an edge. And there are people in this room that are new. They're going to say, man, if this thing loses, this software sucks. If this thing loses, this guy's a sham. Snake oil, right? But guys, this is the exact same pattern that we made a lot of money with over here. So let's see what happens. We know where our advantage is gone. That's where our stop is. They might get it, huh? I don't know. It's scary. I'm willing to lose. If they want my money, they're going to have to come get me, guys. 5 ticks below the triggers. That's what my rules say. If they want my money, they're going to have to come get me. And if they don't come get me, I'm going to stay in this trade. I don't care if it wins or loses. I know that with this pattern, it's more likely to win than lose. With this pattern, with my rules, I'm more likely to find success with this trade than I am failure, but I have to accept that every now and then they will come get me. Every now and then they will stop me out. Every now and then they will take my money. I don't know what the result's going to be. I don't know if it's going to be positive. I don't know if it's going to be negative. I don't know if it'll win. I don't know if it'll lose. But guys, it's just a pattern. That's it. That's all it is. Hunter. Up, weak side, room to trouble, close on the correct side of the triggers, all the money. Great job, Hunter. I'm still waiting for you to break a rule. Nicely done. Well, we're still in it, guys. But Master B, where did I take my entry from? I love that. Where did I take my entry from? Inside. Master B, what does my plan say on the KISS plan? Hold on. The KISS plan says my stop will go 5 ticks beyond the trigger lines where the market shouldn't go, right? 5 ticks. Why? Because the market's an imperfect vehicle. So what I did is I gave it room to breathe. They were at 67.02. I'm at 0.75. There's my 5 ticks. And it saved my bacon, didn't it? So far. So far, that stop's looking pretty darn smart. Oh, man. We went from down 250 to up 25. So, Master B, this is one of the great things, right? It's easy to get scared as a day trader. It's easy to worry. It's easy to talk yourself out of great things. And it's hard to follow a plan. It's hard to see red numbers. It's hard to watch a market pull against you. It's hard to get in when the market's coming down. But trading is probabilities, and trading is patterns. So we're going to stick with the KISS plan, guys. We're 2 ticks below the reversal bar that got us in, and we'll see what happens. I don't sweat because I don't care. My first trade today, Master B, was a $690 loser. 4 lot, NASDAQ, $690. Do you know what my next trade was? $900 winner. It's just probabilities. It's doing the same thing every day. Nope. Chariot, break even is 1 tick below the market. My job is to follow a plan. My plan says they either give me my first profits or they come stop me out. Now that's the very basic KISS plan. That's the plan that gets you guys comfortable following rules. That gets you comfortable being very pragmatic, very if-then, very mechanical. Trying to pull your emotion out of it. Discipline, right? Now, as you grow with the software, Chariot, you'll say things like, if this produces a second pivot lower with divergence, I might take an exit. No, I'm not going to, guys. I refuse to deviate from my plan. They're going to come get me right now because of that divergence, but I refuse to deviate because, Pete, I'm following a plan. Do you guys realize that we just got 3 different management opportunities from 3 different people? Every one of them was based in emotion. Every one of them was rooted in fear. Fear kills accounts, guys. That lower pivot with divergence in my plan is an exit. But guys, if you're not there yet, let it run. If you change it on your emotions every time you enter a trade, how are you ever going to be consistent? If you adjust your entry based on your emotions every time, how are you going to be consistent on entry? And Pete, it doesn't matter what you would do in my room because it's your trading. My job is to trade like a brand new user that has no idea what's going on and following a plan, win, lose, or draw. And then taking that trade and bringing it to the room and saying, did I follow the plans for entry? Did I follow the plans for stops? Did I follow the plan? With the understanding that, guys, there's going to be more, and you will do more, and you will manage differently, and you will write your own plan. But until you can do that, until you can craft a plan tailored to your personal goals based on your experience reading the indicators, take the freaking losers, post them in the room, and let's talk about management. Does that make sense? Guys, you're on simulator. If you're scared to lose on simulator, you're going to get just annihilated in the live market. And I'm going to show you what I did. Pablo's been there. So let me come back here. And let's go to the one that worked, right? We're 50-50, guys. 50% winners on the high probability trend trade. I'm going to show you all the different ways I would screw up the perfect trade. I'm just going to let you into my head a little bit. You guys ready? Dun, 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 dun. Let me take the picture. And first, do me a favor. Does everybody see that that is the perfect freaking look? Best of the best. Just without hesitation, without question. That's everything that we look for, right? And when you have the picture perfect look, do you remember that the market is more likely to go down than up? That it's more likely to hit that fib than it is reverse? That 70 to 80% of the time its profits reached? Did you recognize that every one of you forgot that right here? That every one of you in this room that told me to move my stops forgot that that's more likely to win than lose. There's your first little insight of how emotion screws up trading, guys. Kind of cool, right? I love it because I've been through it. I've made every mistake you've ever made. So let's do this. Let me show you how my trading went as a brand new user. Because we got nothing but time, right? So guys, I got really good at entries. I really did. And I would take my entry, and the first mistake that I would make is I would put my stop 2 ticks above the mid band, hoping that the mid band would hold, and then I would get stopped out and I would watch the market run. True story. This is what I would do. So I would post in the room, and John Novak would give me coaching on where the market shouldn't go. That was one of my first big mistakes. One of my other mistakes was I would get right here and I would go break even because I was terrified to lose. One of you told me to go break even when the market was 2 ticks away from my entry. And the market would stop me out, and then it would run without me. And I would have to put that in the room, and I would have to hear, you've got to learn to trust this chart. You've got to believe that this pattern wins more than it loses. And then I would say stuff like, oh, my trigger's turned against me. I would start to make up my own rules, and I would exit. Or I would say, oh, there's a divergence on the trade. I can't take this. Or I would say, oh, there's small triggers against me, and I would never even take the winner. And guys, the reality is is your brain will try to find every freaking way that it can to keep you out of a loser, and it will tell you that you are in peril. It will tell you that life is almost over, that things are horrible. And guys, the market still went up. They just wanted to push a little lower. They got us. Good for them. But you've got to go through this. You've got to go through this painful taking losses, and you've got to go through this reading, and you've got to go through the mechanical so that it can become effortless. And guys, there's nothing wrong with losses. There's nothing wrong with losses. Let me show you the losses that suck. Pardon, I don't know if that's a bad word in your world. You know the losses that suck is when you trade into fibs, right? And you don't have momentum. When there isn't a clear path, right? When you try to go long because the line is blue. Those are the losses that drain accounts, my friends. So you guys that are new in here, you just watched me. Jay, you just watched me take a loser, right? Big Rat, you watched me take a loser. What you really watched was me to take a trade that fits a pattern that I can prove wins more than it loses. And eventually you get okay with losses. Eventually you realize that there are costs of doing business, that you're paying rent on your storefront. I don't mind that we lost that trade, because that trade didn't look any different than this trade. The entry here was no different than the entry here. Where else did we have circles, right? Hold on. That's the one we won. Pull back to the area inside of triggers, never made it 5 ticks out. Do you guys see it? I didn't know if that was going to win or lose, but it sure as heck fits the pattern. It's not my job to insert my opinion. It's my job to trade a plan that I can prove wins more than it loses, so that I can have consistency in the market, so I can do the same thing every time, assuring myself that I'm giving myself the highest chance of success trading the software. I hope that makes sense, guys. And I really do. I get a little preachy about it, not because I'm trying to be preachy, because I have screwed up trading this software every way you guys will ever do it. There's no emotional roller coaster you can get on that I haven't been on. There's no fear of missing out you can experience that I haven't experienced, guys. There's no mistake anybody in this room could ever make that I haven't already made. And my teaching in this room comes from my own failures. It comes from my own weaknesses. It comes from my own challenges. And my goal and my hope is that I can get you to miss out on some of those challenges and failures and discouraging moments with a very simple plan. So let's move on. And I believe Pete dropped one in. Let's see what Pete did. Strong trending market, clear path, pull back to the area inside of triggers, never made it 5 stops outside, and easy money, Pete. How's that for Exhibit A, guys? How's that for Exhibit A? Correct stop placement. Pete, I don't know if you did that on purpose, but man, that was timely. You guys know where the market shouldn't go. And Pete said, if they want me, they're going to have to come get me. If they want my money, they're going to have to get to where they shouldn't go to have it. Great job, Pete. Upon entry, transition, nothing but room. Pull back, close above. Jen, what was your area? I'm not the trade police. What was your area that you pulled back to? You got me on this one earlier today. Didn't you? And guys, I love it. One of my favorite things, it didn't get to that mid band. That's a moving average. The mid band was down here at 70 when that market pulled back. Great job. Great management. You made money. Isn't that cool though, Jen? And can I'm gonna share something earlier today that I had. So I posted in the room the same trade that Victor posted. Let me find it. I take a lot of pictures, guys. We're up to almost 8150 now. So I posted this in the room. And I'll get it, Boaz, I promise. Took the same trade. Jen, it looks like yours. Self-analysis is asking, did it hit an area? But it didn't. I played horseshoes and hand grenades. And I was like, you know what? It was so close. And what it did is it pushed up and then it ended up going down lower. And when it went down lower, let me show the second half of it. When it went down lower, I caught the close above at the area with the look and made it all back. And guys, that was a $700 mistake that I made. It was a $700 mistake. Jen, you did a much better job managing it than I did, I guess. And what did it end up doing? So that was it. Boy, they're still trying, aren't they? They are still trying to get to something solid to bounce off of. But this is kind of what happens when they don't get to the area. Jen, great post. I think it's interesting that you become okay with making mistakes, especially when you know that the plan works. And the better you get at reading indicators, the more your brain is going to say, that's it. And this is one of the reasons why I trade with a checklist. And I have to use, you did, but Jen, your analysis was spot on. Spot on. And what does that mean? No, don't shake your head. It means that you know. It means that you know the plan, that you know what you're looking for, that you know what the rules say, but God bless you, you're human. You're human, and you do the same things that we all do, and give yourself permission. Guys, everybody's going to make a mistake. It's okay. Thank goodness I had Jen to call me out on it. Which let me call Victor out on it, which made it easy to call her out on it because it was the same lesson that she gave me earlier. I love it, guys. This is a community. We look out for each other, and I appreciate it very much. All right. Boaz. Looks like you had 3 triggers through. All the momentum you could ever hope for. Pull back to the area right inside of triggers, and just easy money, Boaz. Right? 3 triggers through. And this is one of those trades. It's like this little love child between a momentum trade and a trend trade. It kind of fits the rules for both, Boaz. Does that make sense? It is a pullback to an area inside of triggers, but it's also a break and a snapback to the fib with the potential. I don't know. If you have rules met for 2 trades, that feels pretty good. Great trade. And just, you run it all the way up, and when the momentum starts to go away, you're like, I'll just make some money. And then I'll just wait for the next trade because it's always coming. Great job, Boaz. Hall of Fame is going to be awesome today. Have you guys seen those on Instagram where you guys are doing great things with this software? And I get to brag about all my class posting real winners. $1,400. That's a good day. That's a good day. Hey Jen, look. They made your area, but now your rules aren't met. But what did they do? They pulled back to the area. Just like the patterns say they will. I think that's pretty cool. They did pull back. They did make it. And now you've got that I don't know what the triggers are going to do look, but we'll know in 56 seconds. Let's see what they say in 52 seconds. We'll have an idea in 46 seconds. I love these timers. These timers are my saving grace. Because I am a jumpy mofo. I am always looking. So let's see. 30 seconds, guys. How peaceful to have 30 seconds before you have to make any sort of decision. Stretch your back. Do all right. Jess J, how are you doing? I know it's a little overwhelming for new people. Big Rat, how are you doing? I know it's a little overwhelming for new people. Guys, I encourage you, ask me a million questions. Tell me what platform you're looking at. Tell me where you're at. They're down, right? Now they're down, right, Jen? When that bar finished, those triggers are down. Nowhere to go. Let's sit on our hands. Guys, one of the great things about this room is that you have the ability to get feedback on everything that you post, everything that you ask, everything that you could ever wonder about this software. I'm here to answer that for you live 3 days or 5 days a week, 3 hours a day. Take advantage of that. It's difficult to learn how to trade from watching videos. It's difficult to learn how to trade by hoping that the lessons stick from hearing it. It's when you practice it and you post in the room, you'll be floored at how quickly you get to where you want to be. Having a coach, having a mentor. For those of you that don't know, I'm a tattoo artist as well as an indicator. And when I got my mentor, that's when it worked. Been watching my class for 4 years, couldn't afford the software, at least back when you were doing the introduction class. Oh, Big Rat. Well, so let me address both of those. What platform are you guys on? And Big Rat, you're not alone, man. A lot of people, you're on Ninja. Cool. Let me give you guys something. I don't give this to the other kids. I don't like them as much as I like you guys. So Jess J, this goes with exactly what you're talking about, learning the terms, adding the vocabulary to the chart. This is what's called this is the Trend Trade Simple. And I wrote this up. Some of you may have worked with Chris Novak. He and I were like, how do we give them something that's concise, that gives them what they need without all the fluff? And guys, that's what this is. So 5 days a week, we talk about 3 rules on 2 charts, Ninja people. Recognizing advantages, turning them into trades. And each rule is discussed individually every morning. So if you guys are newer and you really want to get the most, go to the live streams and watch the first hour. Watch the first hour where I go over every rule individually, talk about it, show it, describe it. It'll help. So we talk about momentum through strong trigger lines every morning. And we talk about a clear path by not hitting termination conditions every morning. And we talk about the advantage of entering where the market is most likely to continue. It's only 3 things that make the perfect trade. Momentum and path are the core. 100%. Momentum and path will set you free. And they're enough to create a plan that's consistent and profitable. And you see that if you watch Pete in the room. He uses momentum and path like he's getting paid to do it, and he really is. So initially, that's what we're focused on, and you will create your own plan ultimately, but until you can, the high probability trend trade is taught in this room, gentlemen. It gives you a trade that embraces the advantages, has the potential to win up to 70 to 80% of the time. It's a trade that helps you recognize those advantages, and it's a trade that teaches you to read your indicators. It's not your only trade, it's your first trade. So what we go over every morning, I'm going to do a quick synopsis. We talk about the 3 rules that need to be met to take the trade. We talk about the 2 charts that you need to find the trade, exactly where the rules are met and how you're going to use them. We define momentum in no uncertain terms, making sure that you understand it. We define termination conditions in no uncertain terms. making sure that you understand when the path is clear. And then finally, we go through the pattern to define your entry. And we do this every day in this room, guys. This goes through everything that I teach in the first hour, and it does it in 2 pages. In 2 pages to give you a trade that typically wins more than it loses. Now, the only thing that you're going to have to do is the same damn thing every day until it becomes easy. You're going to have to recognize momentum on a chart. You're going to have to recognize termination conditions on a chart. You're going to have to be able to go back and identify your entry. And there's the pattern that I teach every morning. We took this one live in the classroom and made it to our $300 profit target, because in the plan that I just gave you, it also has management for that high probability trend trade. Here's the plan. Now here's the kick in the teeth for most of you. This pattern doesn't win every time you take it. There's the exact same look. There's the exact same entry. And there is a very different result. There's a result that lost money, while the other one made money. It doesn't make this a bad trade. It doesn't mean that you did anything wrong. This is a pattern that you can prove wins more than it loses, which means that every 10 trades you take, you're going to lose 2 or 3 of them if you're following the rules. And I can't stress that enough. But if you post this in the room and you say, hey, Mark, check it out. I took the entry, I followed the plan, I put my stops where they belonged, and I took a loser. What I'm going to do is I'm going to high five you, and I'm going to say, hey, you know what you did? Is you just took a trade that you can prove wins more than it loses. And eventually you get to the point to where you're cool with those losses because you know that there are costs of doing business. So guys, on day one, on day 2, on day 3, what you're going to find is that the classroom feels like this, like you're drinking from a fire hose. And Big Rat, if you tried it 4 years ago, there's a really good chance that you didn't focus on the process, but rather you focused on making all the money. That's what I did in the beginning. That's what most people do, is they focus on the money that they're going to make with the software, and they don't focus on the simple process, the simple plan that creates the results. So as you come back through for the second run, I'm going to encourage you to keep it very simple. I'm going to encourage you to learn a couple advantages and then turn them into trades. And the next thing that I give you guys every day is the trade tracking sheet. I'll drop it in the room again right now in case you didn't get it this morning. But guys, here's those very basic rules broken down into pictures that are annotated so that you can start drilling the pattern into your brain, so that you can say to yourself, if I have to have strong triggers, well, there's only one look that creates strong triggers. And you'll get to the point to where you take these 3 advantages and you turn them into a trade, guys. And I am very passionate about what we teach because I do know that it works, and with a little bit of study, you will too. So I encourage you, ask a million questions. This is your classroom. You can't ask too many questions. You can't post too many charts. Just have fun with it. Miss some of the golden grapes? Are there golden grapes? And eventually with weakness, the market went down, guys. Holy smokes. So that's it every day, guys. You will get out of the software which you put into it. Everybody goes through the same thing. I can't stress that enough, and this is how we'll end the day. Everybody in this room will go through the same thing. I appreciate it. Big Rat says, you're the reason I came back. You simplified it into easy to understand. Looking forward to digging into the software now. Patience and take losses are your big issues. That's why you bought rules. I love it. And guys, reach out to me privately if you need help, if you're stuck. Send me a message. Big Rat, I will never friend request you, but if you friend request me, I'll say yes. If you send me a message, I'll reply. Guys, don't be shy on your learning journey. And when it's decision time and whoever your client advisor is, and they're like, hey, are you ready to commit? If you have questions, let me know. We'll hop into a Google meeting together and make sure that everything is clear. I don't mind doing that at all. I actually prefer to do that rather than people walking away from this amazing software. And I do try to simplify it. John Novak is one of the most brilliant people I've ever met, but me trying to learn from him was like learning string theory from Einstein. He's forgotten more than I'll ever learn, and sometimes it was hard to follow. So I kind of built the class around that. Guys, everybody's going to think it looks like fun. Everybody's going to think it's hard. Everybody's going to get lucky on simulator, and then you're going to have a challenge, and you're going to get knocked back to that point where you have to follow the path to get to where you want to be, and that's when you start moving forward. And we've all gone through it. Hey, Henry 9999. Just marking them up, getting used to it a little bit. I like it. All the momentum, right? Dig it. Starting to break above areas, pulls back to an area inside of triggers, and goes up to produce a little bit of a win before it finally fails. Welcome to the room, Henry. Welcome to Nexgen, guys. I'll be back tomorrow. Learning from Mark makes me say the following after a loss. That's just a flesh wound. But I chopped your arm and your leg. What are you going to do? Bleed on me? Love Monty Python. Love